Welcome back. Verizon inking a deal this morning with Apollo to sell its, well, it used to be called Oath, but basically what it calls now Verizon Media for $5 billion. We're talking AOL and Yahoo. Those are the best-known names, of course, that are a part of it. You can see what Verizon shares are doing after the lackluster earnings a couple of weeks back.
Yeah.
But, I mean, this is not going to move the needle, Jim. Verizon will retain a 10% stake in the company. It will be known as Yahoo at the close of the transaction. And, again, Apollo is the buyer here, trying to, get a sense from the participants as to what the multiple is, right? That's always interesting. What multiple to EBITDA are they paying? I'm hearing mid-single digits, but there are some assumed asset sales in there as well. So it's a highly structured transaction. And that's about all I got in terms of really getting a sense. So let's call it mid-single digits. Not a big surprise that this was for sale. In fact, I had heard it was for sale and asked CEO Hans Vestberg about that very fact back on March 11th. Take a listen. Your media assets, Yahoo, of course, being one of them. But I do hear if you were able to find a buyer for them, you would sell them. Is that true?
First of all, these guys in Verizon Media Group has done a fantastic job. I mean, we changed the whole business model and the business plan as we started in 2018. They have changed all the products, taken out cost, and we're starting to grow. And the fourth quarter showed what we have. So I think I'm very pleased with that asset and how the guys have been executing. So we are supporting them. They're part of the family, and they're a very important part of it.
All right. It wasn't a no, though. No. And, what I knew they were for sale, but the only question was, would they find an actual buyer? And they did. $4.25 billion in cash is what Verizon will get. Preferred interest of $750 million and that 10% stake that they will retain in the company. Jim, I went back to my old files, too, just to try and remember as a point of education for people today.
Right.
Because remember, of course, at one point, Yahoo was worth over $100 billion.
Yeah.
AOL bought Time Warner. And by the way, there was a write-down already taken by Verizon. They paid about, let's call it, $8.5 billion total for these two assets. They took a $4 billion write-down. What was it? A few years ago already, 3 years ago, on the assets themselves. But I went back and found a research report from January of 1999. You can't really make it out here. I mean, it even looks old from the type on it. Just to give you a feel for what was going on back then on Yahoo, this was an analyst at Warburg Dillon Reed. Yahoo's trading at 150 times our 99 revenue estimate. It's trading at 107 times our 2000 revenue estimate. Absurd? Absolutely. But it was absurd 100 points ago and 200 points ago. So we will not be stupid and change the rating. If we get a good number in a stock split, it's off to the races again. And that just shows you, as an example of where things were then, and 20-plus years later, where they are now in terms of value.
No, extraordinary loss of value. And I think the lesson there was that Mark Cuban told you to sell it.
When he did the broadcast.com deal and took the $5 billion, and that's what made him a billionaire in Yahoo stock back in the late 90s, and then collared it, I think, pretty quickly.
And then invested very, very well. Yeah. But, David, one of the things that you and I both know, there are some very talented people there. What happened that the talented people could not make a go of it, or at least enough of a go of it for Verizon? Or were they making a lot of money? I don't know.
I don't know that they were making a lot of money. I'd love to know the actual dollar amount that multiple is based on for EBITDA, because that would give us a better sense, Jim. I don't have a great answer for you on that.
But the buyer's a smart buyer.
Yeah, the buyer's a smart buyer. They're thinking about ad tech. They're thinking about about sports betting. They're thinking about continued innovation as well in financial technology. So we'll see if they're able to grab a hold of any of that, Jim, to actually create a much higher level of EBITDA eventually that makes it a good deal. And, of course, don't forget, it will come back to the public markets at some point. That's the way you draw it up, right?
Exactly right.
Shepard Smith here. Thanks for watching CNBC on YouTube.